Hello dear crypto friends, and welcome to this video in which we are going to talk about how the Fed is dictating the market, but not only the stock market, but also of course the crypto market, since we now know that crypto is very much tied to the stock market, very much positively correlated to the stock market. And since the Fed has an insane influence over the stock market as a whole, of course, logically, it also has an insanely high influence over the crypto market. And we all know that the Fed has started quantitative tightening, which means they are reducing their bond purchases. And not only that, but they are also increasing the interest rates, right? And that, of course, creates a lot of fear and panic in the markets. We see that quite nicely. Here we zoom into the Bitcoin chart. I have loaded, as always, the weekly long-term chart with the moving average 200 in blue, with the long-term regression channel that we see is being respected since back in 2010. Now, in order to understand what Bitcoin might be doing now, if we go into a crazy bear market and stay here and then only recover in 2024 for the next halving, or if, as I am inclined to believe for reasons that I will now clarify, namely that the stock market and the Bitcoin market will make an unexpectedly sudden and brutal move upwards that no one is expecting, well, in the end, it all depends on what the Fed will be doing. So let us have a look at what is happening with the Fed. We know that the Fed has started raising the interest rates, right? We load the Fed funds rate here and we see that the Fed fund rate is shooting upwards. It's just like it was super low and then bam, it starts shooting upwards. The last time this happened was in late 2015, right? In late 2015, we see a very similar situation. Now, long term, the Fed funds rate was first rising and then it peaked in the early 80s. And since the 80s, it has just been declining and has this descending resistance since really back in 1980, it appears. Now, everyone is believing that the Fed will continue tightening and raising the rates until the interest rates will hit 2 to 3% sometime in the next year. That is what people believe, the line that I have drawn now, right? That is what people believe. And if you don't believe me that people actually indeed really think that the Fed will raise the rates in such a short time frame to incredible levels of 2.8 to 3%, so even higher than in the peak last time in early 2019, if you don't believe me, there's actually an interesting tool, the CME Fed Watch tool. And this tool is quite interesting because you can go to all the different dates here and see what the market is actually believing with probabilities. So what is actually currently priced into the market. And we see that currently the market thinks there's a 91.6% probability that the rate will be increased to 125 to 150 basis points in the next meeting in the mid of June. And note that the current target rate is 75 to 100. So that would be an increase by 50 basis points, okay? 50 basis points. So in order to get the percentage, we just have to divide this by 100. Therefore, we are at currently 0.75% interest rate. Now, in order to understand what the market is already pricing in, we have to really take these probabilities into account. And we see that the market already has priced in a 50 basis point hike in the next meeting in the middle of June with a very high probability, okay? Now for July, the market prices in a probability of 175 to 200. This would correspond to another 50 basis point hike in the July meeting, which takes place here at the end of July, the 27th of July, okay? That is the logic. Now, and that is important, the market has priced this in, and that is of course the reason why the market is so bearish. If we look at the Dow Jones and we want to understand why the Dow Jones suddenly reversed in late 2021 and since then has been just falling like the S&P 500, of course this is much worse with the Nasdaq that has really just been on an insane downturn since late 2021 and we are talking a downturn of 31.49%. So the market is really anxious and everybody is afraid that the Fed will just continue raising the rates, continue. And that of course makes the dollar stronger. That of course makes it harder for companies, especially for tech companies, to take up loans, which of course in turn is bad for innovation, bad for new products, bad for new investment. And therefore the market does see this as a very bearish sign. And that is also the reason why everything is just dropping like a stone. And tech stocks are of course especially vulnerable to this. Now, if we move forward, the market anticipates for February 2023 with 37% 250 to 275 target rate, and with 41.9% we are talking 2.75 to 3% interest rate. We go back to the Fed funds. So basically the people anticipate something like this here repeating in some form, so that we are at about 3%, 2.75 to 3% in February 2023, right? That is what people are anticipating. Now, if that was to happen, I fully agree that we are in a bear market, and then Nasdaq and stocks and crypto accordingly will just continue to slump. Not much will happen, and we are just in a bear market, and it will just continue slumping. How deep it will fall, nobody knows. But as long as the Fed is tightening like crazy, there will be no rally. That is clear, right? So why then do I think that the Fed is playing us to a degree? Maybe they are not doing it on purpose, but they are certainly playing with the market in ways that is not really responsible, in my opinion. Well, for that we have to remember what the Fed was actually saying when the market saw the peak, right? Because now we are at bottoms, we are dumping like crazy. But what was the Fed stance last time we had a bull run? And interestingly, the Fed here, I still remember it was almost exactly a year ago, the Fed was saying here when Bitcoin was at over 60,000 that don't worry guys, inflation is just transitory, it will pass. We don't need to stop with QE, we don't need to start tightening, we don't even need to start raising interest rates. Everything is okay guys, nothing to see here, just move on. We will not do anything and the problem will sort itself out. What a surprise, of course this didn't happen, right, as we all know. But then when the inflation problem got worse and worse, the Fed suddenly changed its tone. And when did this happen? Of course, this happened at some point in late 2021. And that was the time ever since when everything started dropping, right? And now here, the Fed, and remember, the Fed was saying everything fine guys, we will not raise interest rates. And then here at those insane lows, when sentiment is super bearish and everyone is extremely bearish, they are saying, yeah, we will raise rates like crazy. We will raise at least 7 times this year. We will raise with no regard to the market. We will raise like crazy berserks as long as it takes for inflation to come down. Nothing will stop us. So what do we see? This is the exact opposite of what happened here. Here, they are completely saying, no problem, we will never raise interest rates, we will never start tightening. And here they say the exact opposite. Here they say, yeah, we will tighten like crazy and we will raise rates as long as it takes with complete disregard for the market. Now, are they playing us or what? They are saying the exact opposite of what they are actually going to do. I'm not joking. If we would have believed them here, we would have said, okay, the Fed is not tightening for the next years, right? And if we would believe them here, we would say, okay, the Fed will just be tightening for the next years, right? But it appears that the Fed is either just playing us, or they have an extreme delay until they realize what actually is happening. It could be the latter, that they have their data upon which they base their decisions. They get it with a huge delay, okay? With a huge delay. They look at CPIs, they look at the bond market, and they make their decisions, and they're like, this is like a huge delay to the markets. So actually what they are saying is not valid anymore. And now if they get new data, for example, if we look at the 10-year yields, we see that the 10-year bond yields that are always in this descending channel, they have actually already started to roll over and are apparently coming down again. They are coming down. This is also nicely shown in the long-term RSI, which is one of the highest it has ever been in its history of the 10-year bond yields. So the yields are coming down already, but not only the 10-year, but also the 2-year bond yields, same picture. They have rallied insanely, right? They have rallied insanely. And that was also the time when they started rallying that the Fed started announcing to tighten, right? And now that they are starting to roll over, at some point, that is my theory, they will start suddenly, without a warning, again making a 180-degree turn, the same way they did back in 2021, when they went from, no, we will never raise interest rates, certainly never, confirmed, to, of course we're going to raise like crazy maniacs. Of course, what did you think? So this 180-degree turn, I think, will take place again, and out of nowhere and without a warning, and the market is absolutely not pricing this probability in whatsoever. Like we've seen the probabilities here, that the probability for in February 2023 that we have only 200 to 225 basis points, the market sees it at 0.5% probability. 0.5%, and we are talking 200 to 225 basis points. This is already raising quite a lot. And look at this here in July. They only see a 6.6% chance for 150 to 175 basis points. Remember, we are now at 75 to 100. Only 6.6%. So if such a case comes where the Fed suddenly doesn't raise the interest rates as much as they were promising, because they see, oh damn, yields are coming down on their own, and inflation might have already peaked actually back in April as data indicated, and on top we see that inflation might have actually already peaked. But of course the Fed will again have a huge delay, and only when the inflation goes down again, very notably so, and the bond yields start now really falling off a cliff, then suddenly the Fed will say, oh, you know guys, maybe we should pause with these rate hikes, maybe we should not raise as aggressively anymore, you know. So the same way the Fed went from here saying like, oh, we will never tighten, don't worry, we will never raise interest rates, this is just transitory, to a complete 180-degree turn to we will raise like crazy maniacs forever. I think the Fed will, based on this inflation data here and based on the 10-year and 2-year bond yields that are starting to roll over, they will suddenly make a 180-degree turn. And as I showed you, the market is not pricing this in at all. They think the probability for this is 6.6%. That is hilarious. The market is absolutely not prepared for such a thing. And if the Fed, that is my theory at least, and friends, remember, I could be wrong, because the Fed could just be complete psychos, and yes, they could just continue raising rates with disregard to everything like complete crazy maniacs and just continue raising. Then of course the whole theory is invalid, because then the markets will just go into a bear market and the Nasdaq will just continue dropping, Bitcoin will just continue dropping. That is clear, right? That is self-explanatory. But if, as I think, they do make decisions but with a delay, and they act like with a weird stupid delay and are like very strange in the way that they announce their strategies, they will make a 180-degree turn, I think, and that the market is completely unprepared. And what will happen? What do you think will happen if between now and we said June, right, or July, the Fed will suddenly see, oh man, inflation has actually peaked, the bond yields are starting to fall, we don't need to raise the interest rate so much anymore, we can make a few pauses, you know? What do you think the market that hasn't priced this in as a probability at all, like with a few percent only of probability, what do you think will happen? I can tell you what will happen. This year will happen. This year will happen because the market thinks that the Fed will just continue to raise rates and that we will be in an insane bear market as long as this is going on. But no one is pricing in the probability that the Fed suddenly makes a 180-degree turn. And in this case, I think we are going to have an insane rally, and no one is pricing this in. No one thinks this is possible. And then afterwards, when the market is super euphoric and everyone is thinking, wow, amazing, this will keep going on forever and ever, then BAM! That is the time when the actual crash will be coming. That is my theory currently, friends, and I don't know if I'm correct or not, but just looking at the strategy of the Fed and how they were doing it the last times, I think they are really slow to adapt to new situations, and they are just really bad at these decisions. And so it is my theory that they will make an unexpected 180-degree turn, and then we get a huge rally in the Nasdaq. And since Bitcoin is very much positively correlated to the Nasdaq, I think we will also get an insane Bitcoin pump to crazy high prices, over 100k, 150k, with luck, with a lot of luck, 200k. And then we see the completion of this 1, 2, 3, 4, 5 wave, huge bull market that we actually have been in since late 2018. That would have been a 4-year Bitcoin bull market that has just been stretched out so much that we didn't realize that it was actually a continuous bull market. That is my current theory. If that will change, of course, I will let you know. And as I said, friends, if the Fed are turning out to be complete psychos and just disregard everything and just continue raising like crazy maniacs, then my theory will be invalidated. And then, of course, we are going into a bear market. And what does that mean? Well, that means that we will revisit here the MA 290. We will go down to 17k, bounce around, and then we can just forget a bullish price action until the end of 2023, and then in 2024 we will probably see the emergence of the next bull market. That is what will happen if the Fed are really complete psychopaths, but I think they are not complete psychopaths. They are just either highly manipulative or they are just really slow at making their announcements with a delay when actually everything has already changed, and then they suddenly switch 180 degrees. Okay, that is what I'm currently thinking, and this will have a huge impact on the price action. And therefore I think the probability for something like this here is actually higher, in my opinion, than the probability for something like this here. But of course, friends, I could be wrong. Okay, that is just the theory I currently have. And that, of course, will mean that Bitcoin will be pumping like crazy, altcoins will be pumping like crazy. We look at the altcoin market cap total 3 without Bitcoin and Ethereum, and this is what is going to happen. We will go to crazy high valuations and the altcoins will pump like crazy. Many altcoins will go times 10, times 20, times 50. It will be insane. That is my theory. I could be wrong, friends. Again, I could be wrong, but I have this feeling. I just have this feeling based on what the Fed did in the past, because they are just weird, and they are playing us like crazy maniacs, or they are just really slow. But either way, if we understand their logic, we can make predictions about the market. Thanks for watching, friends. I hope you found this interesting, and if you got some interesting information out of it, maybe even consider to subscribe so that we can venture on this journey no matter what Bitcoin will be doing, until at some point Bitcoin will reach the obligatory $1 million per Bitcoin. Thanks, friends. Have a nice day and see you in the next video. Bye.